everyone. Thank you for joining our very first edition of Zip Chat. So thank you very much for joining us. And so now I'd like to introduce our moderator. So Florence, over to you.
Thanks, Jill. Thank you everyone for joining us here today. As Jill mentioned, I work with a variety of things, the most important of which is with our clients. And as many of you know, a lot of our clients are small and medium-sized growth companies that have been severely impacted by the current pandemic. So we're very excited to have with us today Adam and Bob back. And joining us today is also Elizabeth Kospik, who's over at Baker Tilly. And between the three of them, they have a wealth of knowledge of the CARES Act. And this is going to be a quick session. We're going to do a Where Are We Now? And I'm going to just go around the table. And Elizabeth, since you're new to this round table, let's start with you. What do you want to start and tell us what you see as happening right now?
So thank you so much for having us here today. And I think this is a great venue to talk about how fast things are changing, how every week the SBA, the Treasury is putting out new information, and we're all just having to follow it in detail to make sure that we're protecting our clients and our businesses to help us go forward and put everybody in the best position to survive through this difficult time and an uncertain time that everybody's trying to just go, how long do I need to make this cash last? And I don't want to miss opportunities that are going to present themselves because there are new markets and new ways of doing business that everybody's going after. So it's been a great experience. We're really watching what's going to be considered forgiveness on these PPP loans for our clients that have already received them. What's going to be considered need for clients that have already applied for it based on uncertainty at the time. And it's been a very interesting point of view to watch what companies have been giving back money and which companies are saying, there's no way, I can't make it and I can't get funding, and it's just frustrating.
That's
I'll let the other group talk too.
Yeah, that's very helpful. Elizabeth, thank you. We're certainly in a different phase. I know some people are still struggling with this, but definitely we're now trying to figure out the other end of this, which is the forgiveness piece. Since Adam also brings a financial perspective, I'm going to first ask Bob from his legal perspective, Bob, to mix it up a little bit. You were with us when we first talked about this in April, when this was all starting up before the doors closed. But what do you see now? Where are we now?
Well, I think Elizabeth has teed it up quite well. You know, a month ago when we did these, we were talking about questions like, what is the Paycheck Protection Program? Who qualifies for Paycheck Protection loans? How do I get mine? I'm having trouble getting my bank to participate in the program. I feel like I'm not being allowed to get online with everybody else. And so those questions seem to have receded in importance over the intervening month. But the questions now that are coming up are, what does forgiveness look like? And so, and in fact, while that might have seemed like kind of an academic question, everybody thought they knew what forgiveness was. We got a pronouncement this week from the SBA that they were actually going to question agencies before they granted them forgiveness about whether or not they'd been appropriate applicants to the Paycheck Protection Program, and should they have actually acquired credit elsewhere, and if they should, then perhaps they aren't eligible for forgiveness. So you know, that caused all of us in the legal space to throw up our hands and go, now what? You know, I mean, it's one of these, you know, I think this has been an exercise in the management of uncertainty because of the speed with which the program has been offered. And we're just dealing with more uncertainty now. And so, you know, we're a recipient of a Paycheck Protection loan. We've been funded. We've actually paid a payroll out of it. And I can tell you that they're going to have a hard time explaining to me why that's not forgiven at the conclusion. So it's going to be really interesting, and there isn't a lot of clarity right now.
So the lack of clarity continues, but it sounds like there is some relief that people have started to get. Adam, I love your perspective where you do ask business owners to think beyond just the PPP. In your own words, what do you see happening right now, and what else do you think people should be thinking about?
Yeah, so along with what Bob was talking about with uncertainty and Elizabeth was talking about things changing very, very quickly, one of the things that I'm talking to my clients about every day is one of the best quotes that I've heard from Mark Cuban in this crisis, which is ready, fire, aim. And that's a little bit about how we're operating right now. And the point of it is, and things are moving so quickly. So you got to take short decisions. You got to make fast decisions. You got to continue to move forward. And so what we've been even doing on these loans, like the EIDL loan and the PPP loan, is you apply and you get in line and you make decisions to secure capital. But you should be doing this across the board. There are other capital sources available, other SBA sources. The Federal Reserve has the Main Street Lending Program. You should be contacting your bank and asking your line of credit provider for an expanded line of credit. There are other programs available that we'll get into later in this program about securing additional capital. So we want to make decisions quickly. We want to be in an environment where we're going to continue to grow, to see business flourish, and whatever. The human race is going to survive. Population growth is increasing, and let's hope that population growth continues to increase, and this is not a disaster. I want to live on the side of thinking that I worked till the bitter end and kept making the best decision that I could, and continuing to grow business and the environment and helping others. And kind of a last thought in this opening segment is, I believe we're all in this together. It's, the government has said don't work. I mean, I'd love the government to step in and pay everybody, but I think everybody's in it together. I think, employers are in it together, and they're going to have to bear the burden of sick costs and increased costs and paying labor and PPE and things like that. Workers are going to have to bear additional burden too, and everybody's going to kind of have to bite the bullet in this. So, I'm attacking this with a healthy attitude and one to make quick decisions and just treat people well and come out of it at the end on the good side.
As human beings, right?
Yes.
Yes. So let me ask. I think in leading up to this, we solicited for questions, and some of the questions that I'm starting to see now are pointing towards the forgiveness piece. One of the questions was from the viewpoint of an individual who was worried about the pay cut that they received from their employer. So let's talk about the forgiveness piece a little bit. And we do target the client companies here more than the individual side. But what does it take to get this loan forgiven? What does an employer need to think about? What do individuals need to think about, for that matter?
Okay, so our goal is always to protect our clients when they get the loan, and to try and preserve as much of that loan as possible. So if they also got the EIDL, the $10,000, that $10,000 is the first thing to come off of the forgiveness amount. So let's say you have a $4 million loan and you get the $10,000 up front, you're now at $3,990,000 on your forgiveness. The next thing you're going to do is make sure that you've got 75% of your loan going to payroll costs over the 8-week period from the date the funds were issued to you, from the date the loan was extended. And the banks have 10 days from SBA approval to get those funds to you. So on top of making sure that you've paid 75% of your payroll, the next test is, what's the number of employees that you have during that 8-week period? And as the code was written, what is the number of employees that you have at 6/30/2020? Now, there is speculation that that 6/30/2020 may or may not be a magic date. And we'll all be watching that to see. But of that, let's say that you did have a drop of employees from, I think it's February 15th until April 29th. If you dropped employees, if you replace that number of employees, not necessarily the specific employees, but that number of employees by June 30, then you're golden and you don't have to go through the next 2 tests. If you don't replace those employees, then you're going to say, hey, I'm going to compare my employees in 2019 for the same period to the loan period to what I have in 2020, and what is the average number of employees for that. And I'm going to compare those and say I've dropped my number of employees maybe by 5%. Then I'm going to reduce my loan forgiveness by 5%. Then I'm going to also look at and see, third test, what am I paying my employees now versus what I paid my employees before the COVID crisis hit? Did I make my employees take a drop in pay of more than 25%? If they took a drop in pay of more than 25%, the difference between the 25% and what they took, so if you gave everybody a 40% pay cut, then that 15% of your PPP loan is not going to be forgiven. So those are the tests that are going to determine what's forgiven, what's not forgiven. It is not an all or nothing thing. It is a simple calculation. Well, I say it's a simple calculation. It is not simple at all.
The devil is in the details, right?
Just detail.
Yes.
But that's the overall plan, and that's how we, in documentation, I'm sure that our attorney is going to say, hey, make sure you have all the documentation, make sure you have all the payroll summaries, payroll detailed GL reports, payroll ledgers, your 941s that you filed, your state filings that you filed, and proof of payment of all those taxes. You can defer the FICA and Medicare payments on the employer side, but not the employee side. However, and you can defer it till 12/31/2020. However, make sure that you can make that payment, because if you're the person that's signing the checks, you are personally liable if that company goes under or you can't make that payment, and that's a big deal.
That's a great summary, Elizabeth. Thank you. Bob, Adam, do you want to add to that? And go for it, Adam.
Sure. So thank you, Florence, and thank you, Elizabeth. Hit the nail on the head in terms of some of the bright line tests that you have to make in order to ensure forgivability, and also the documentation requirements. However, I would, or in addition, I should say, I would suggest to contact your banker first. The banks are the ones that are the decision makers in the forgivability. They're also going to be the ones that are going to be requesting the documentation. They may have a template that they can fill out. I actually offered to my banker that got me my PPP loan if I could help build the template. I'm actually getting very specific questions, such as, can you deduct your accrual for 2019 401k contributions using the PPP funds? And so Elizabeth might be shaking her head no, but there are things that are in the gray area, that questions that have not been answered. We're talking about, we have the interim final rule, if that even makes sense, interim final. So the SBA is going to come out with additional guidance on forgivability. Elizabeth is 100% correct to maintain documentation, to look at these things. And I also just want to urge people to be cautious that there are multiple layers of double dipping here, and there are multiple programs out here. So for example, there's a program that you can apply for payroll tax credits of up to $5,000 per employee, and immediate check from the government. But that might come into conflict with the PPP loan, and it's not completely known all this information yet. Also, one more thing with respect to forgivability is it's partial forgivability. So let's say you only hire back 20% of your workforce and not 25% according to the calculations. You might lose 5% of your forgivability approximately, just using round numbers. So, you know, maintain documentation, talk to your banker, and you know, the thing that I would probably say is just be honest. You know, even these companies that have given back the funds, if you've taken multiple layers of funds, you know, you have the, as you're ready, firing and aiming, as you're doing multiple loans, if you have the ability to not take a loan that you shouldn't or a credit that you shouldn't, you can send it back to the government. You know, nobody's going to penalize you. These rules are changing, and you know, I just urge you guys to do the right thing.
Go ahead, Bob.
Yeah, if I can pile on that a little bit, you know, so I mentioned at the outset the uncertainty around forgiveness and the SBA's interest in making sure that the recipients of the PPP loans were actually qualified recipients at the time that they received those loans, or should have taken them under the theory that if they had access to other credit. So to add on to what Adam is saying, the safe harbor that they've indicated for the return of the funds is actually May 7th, and so they're saying that if you want to return the funds by May 7th, no questions will be asked. And so a number of organizations out there, particularly ones that got a lot of attention for having applied for the PPP loans, have returned those funds. They're typically organizations that that got the loans under the special affiliation rules. So they had this Byzantine structure of organizations that amassed a lot of PPP funding, and so those organizations, Ashford Hotels, Shake Shack, etc., have returned the funds in exchange for no questions. One other example of how other agencies play into this, and you know, there's a lawyer talking to the accountants, and so you know, tell me if I'm wrong, but the IRS last week came out and said, hey, by the way, you will not be able to deduct your expenses for payroll, et cetera, for things that are paid by your PPP loan. The flip side of that, however, is that the forgiveness of that loan won't be treated as income either. And so that's a great example, though, of how this program continues to evolve as agencies that aren't directly involved in it are going to get the chance to look at it. And so it's really important to just kind of buckle up and hold on, because we don't know where this thing's going.
Yeah.
Just one point on that, Bob. I'm sorry to interrupt you, Florence.
No, go ahead.
But be vocal. Like I said, we're all in this together. If you think that there's injustice done, if you don't have clarity, call your the head of your professional organization, call the SBA, ask questions, make things known, because even call the news. I mean, people are reporting this stuff to the news, and it's trickling up, and additional guidance is coming down. So I would say the more that we're in this together and we share information, and we make our voice heard, the more that the rule is going to be more geared towards what the populace think.
Yes, I agree, Adam. I think I've lent my name to at least one advocacy letter as well, and I think there is a lot that we're all trying very hard, including the government. I want to ask a little bit about this gray area that all of you touched on a little bit, so we can dig and answer some of the questions that might be latent in people's minds. So this gray area. So as you go through, and we you know, you've said as much that these rules are still being written for the forgiveness. So what is your advice, I guess, in terms of getting a little bit more clarity on the grayness of some of this, apart from the advocacy piece, Adam? How do you go through and do the best you can for your business?
I think the first thing is go into Google and type in SBA interim final rule. or PPP loan interim final rule. And there's a PDF document. It's 7 pages. It's very well written. It's succinct. It gives clear examples. And so I would urge you to read that, because it goes into some of the 25% and 75% calculations and some of the date ranges that you need to worry about. There's also on the SBA website, and you know, I know ADP has a good document with respect to how to account for some of these items, and you know, how to treat certain percentages. And so I think looking for those FAQs and you know, and just doing quick Google searches, you'll be able to find information. You know, I also want to say, contact your professionals in all this matter. And this is not just about the PPP loan. This is about every single loan you have, every single insurance contract you have, every single vendor you have. It's, you got to rely on your attorneys, your bankers, your CPAs, because this is a new environment, and even your insurance companies, and so you want to be in touch with your professionals that are helping you make those decisions.
Let me ask one specific question that I see coming in. The $100,000 income limit that we had in calculating the amount for the PPP, does that apply? And if so, how does that apply in the forgiveness piece?
It does still apply. And so, like, let's say you have 25 employees and some of those make over $100,000 per year. Let's say you pay payroll twice a month. So you take that, each payroll, you're looking at each individual payroll over the 8-week period, and anybody that's making more than $41.33 per pay period, you're going to deduct the difference in that from the amount that you're using the funds.
Yep.
It doesn't have anything to do with forgiveness, but it's just that that's the amount that you're using the funds to get to that 75%. And it's on gross pay. It includes whatever the employee is contributing to 401k. It includes whatever deductions they have for payroll taxes as well.
Just one other important point about that too is there are limits to officers' compensation for numerous SBA and loan and credit programs right now, approximately $450,000 cash compensation. Typically, this is done on a cash compensation basis and not for other sort of maybe stock-based compensation or things like that. So, you know, watch the overages, even above $100,000. There's limits to officers' compensation in these programs as well.
That's very helpful. I know we don't have very much time left, and contact information for all of you is on the slide that we're showing. So everyone's welcome to please reach out directly to Elizabeth, Adam, or Bob. And I just want to use the last 6 minutes that we have to say, okay, so here we are. Now what? And this time I'm going to start with Bob.
Well, I want to go back to a point that Adam made, because I think it's really important in now what. Adam was talking about reliance on professionals, and the thing I think I want to stress is reliance on your partnership with your bank. They're your partner in this, and they're dealing with the uncertainty just as you are. So at the very outset of the program, when we were preparing our first payroll under the program, we said, hey, would you help us look at our numbers and make sure that we're doing things within the context of what you think would be forgivable at the end? And of course they said, we don't want to do that, talk to your accountant. But when it became unclear about how the SBA might be looking at forgiveness when it came time to think about whether we were appropriate applicants under some of the real recent uncertainty, they said, you know, if you want us to say that we wouldn't have extended you any additional credit, we're happy to say that. So the point is that they're your partners in this, and I want you to don't forget that your bank is dealing with the same uncertainty you are.
That's right. Thank you, Bob. Adam, do you want to go next, and then we can end with Elizabeth?
Yeah, sure. You know, some of the things that I would continue to recommend are to be business owners as if you were starting your business fresh again. You know, do a SWOT analysis, do a business plan, have a benchmark for where you're going to be next week, next month. Do a cash flow forecast. You know who your capital providers are. You know, some of the things I'll also say are circulate money. So it's a little bit of a different environment because you're not a new business. So you have fun. If you have funds available, circulate money. If you're doing your billing at the beginning of May, like CPAs and attorneys may do billing at the beginning of May, do your billing at the beginning of May. Stay on top of your collections. You know, but reach out to your clients and make sure they're okay too, and make sure you don't have to, you know, give them some assistance as well. Review your cost structure opening up. You're gonna have to have benchmarks. You know, if you can't measure it, you're not going to improve it. So come up with a benchmark for how you're going to operate in the next month, and goals, and see where you are. And I might even recommend to do that weekly, because you're going to have to know how to price certain products and services in this new environment. The final thought is just about access to other capital sources. I know there were some questions that came in about other industries, the healthcare industry. You know, there are additional programs where the CARES Act was set aside up to $100 billion, I think, for the healthcare industry, and $30 billion of immediate funds, you know, through HH and Health and Human Services. Also, the USDA has a program for farmers. So there are, and as I mentioned, there's payroll credits available. So there's other forms of assistance available. So try to tap into other sources of capital, and also find new opportunities. Do that SWOT analysis: strengths, weaknesses, opportunities, and threats. So know what your strengths and weaknesses are, and know what opportunities and threats are in the environment, and try to align your strengths with your opportunities, and your weaknesses with your threats.
That's wonderful, Adam. I totally agree. It feels to me like this is an opportunity, or we can look at it as an opportunity. And one more thing I want to add to your list, because I know at least one of our clients leveraged it, is there's small business grants from different organizations. There's one from Facebook that had opened up last week. So look for things like that. I know Amazon, for instance, is offering workspaces for free for up to 50 users. As soon as we can help you with that, set that up, for example. So there are a lot of things that a lot of the large organizations are doing as grants or as assistance in this time, and I think I really appreciate everyone that's stepping up. Elizabeth, do you want to close us out and think about what business owners, tell us what you think business owners should be thinking about now to survive and thrive?
Sure. I saw one of the questions was, what is it going to take to turn all this economy around? And it's going to take everybody individually and your own efforts. We are going to get through this mess. We are going to end up with a different economy now than we had a year ago. We're going to have a different economy 10 years from now, just like we would have anyway. You're going to have to look at yourself in the mirror when you're done with this. Communicate with your employees, communicate with your banker, communicate with the people that you rent from. I mean, we have clients that said, hey, we're going to make our rent payment this month, and they were so thrilled just to know they could count on that cash. And you're going to end up making those payments one way or the other at some point, whether it's down the road or something. Just communicate, and you may have to go back to them later and say, I can't do it. So let's just communicate, be optimistic, take care of the health of your company, take care of your own personal health, because none of this is worth anything if you don't have that personal health too.
That's wonderful. Thank you, Elizabeth. And I'm trying to take your advice as well. And I've been running every morning, well, walking or running every morning. But so thank you for that.
Well, too.
Yes. And with that, I'd like to thank Elizabeth, you and Baker Tilly and Bob and Wright Canaster and Adam and the Minnow CPA Corporation for joining us today. And I'm going to send this back to Jill. Jill, you want to close us out? Thank you so much for organizing this.
Thank you.
Thank you all.
And you are on mute, of course.
So sorry.
Yes.
Typical of today's environment. Thank you so much for everybody coming. Florence, I look forward to running with you next time we're together. We've tried that a few times. Thank you to the panelists and thank you to all the attendees for coming to our very first Zip Chat panel. I appreciate it. We'll have another one in 2 weeks. And that one is going to be on the effect of AI in this COVID-19 environment. So look for your email and we'll send you that one out. Thanks, everybody.
Thank you.
Bye.
Thank you.
Bye.